Bitcoin fell $10,000 in just the last 48 hours. But in 2020, just 4 years ago, Bitcoin traded for less than $10,000 for most of the year. Don't let the volatility shake you. It's only due to a fragile debt-based monetary system and Bitcoin's active monetization, its rapid growth. And what's interesting about this crash is how fragile the debt-based monetary system has become. Looking at the VIX, which is an index for traditional finance volatility, it's over 50. The last time the VIX hit 50 was March 13th, 2020, the exact day Bitcoin bottomed at $3,000. Now, will this be the exact bottom again? Who knows? But this weekend has been a wipeout of historic proportions already. But what's important is this. Bitcoin's volatility is not due to the inherent instability of Bitcoin. Contrary to its price, Bitcoin itself is actually the most stable and most predictable asset in the world. It has no CEO, no management team, no earnings to hit, and no competitors competing for its future profits. Bitcoin is a physical bearer asset, something you can physically hold without counterparty risk, like gold, and it has no dilution risk. It's the only asset with a predetermined supply distribution schedule and an immutably fixed total supply. So why is Bitcoin's price so volatile if the asset itself is not changing? Well, companies go up and down because the present value of their future cash flows changes. Bonds go up and down on default risk and inflation expectations. However, Bitcoin seems to have a mind of its own. Why is it so volatile if it doesn't actually change? Well, it's the humans that are volatile. Clearly, a large majority of the capital in the world has no idea how to price Bitcoin. Many say it's worth zero. Few say it's worth over $49 million. A very small minority of the world has learned that Bitcoin is simply a better form of money that you can buy and save. As Bitcoin itself continues functioning and becomes more scarce over time, it will continue increasing in value relative to dollars. As more humans learn about Bitcoin and learn it's a better money, and they move a large portion of their wealth into Bitcoin, then Bitcoin will go up in value relative to dollars. And that's where almost all of the volatility is from. Over the last 14 years, Bitcoin has had a compound annual growth rate of over 200%, which is absurdly high. Bitcoin is volatile because it is growing so fast. So just because Bitcoin is highly volatile in the short term doesn't mean there is substantial long-term risk. This can be confirmed by looking at Bitcoin's Sharpe ratio. Bitcoin's Sharpe ratio shows that its returns are worth its high volatility. Bitcoin has had a substantially higher Sharpe ratio than all other major asset classes. This is showing that the price of Bitcoin is effectively melting up in a superior risk-adjusted manner. If Bitcoin was growing at a steady 200% annual rate, what would happen? Well, investors and speculators would catch on to the trend, buy Bitcoin in size, and cause a massive, exponential, unsustainable bull market. Ultimately, this results in a volatile, deep bear market that frightens outsiders and wipes out many that don't understand Bitcoin. So sure, Bitcoin can fall 17% to prices seen near the start of the year, or it can even fall 80% to prices seen a couple years ago. But the price is still likely multiples higher than it was 5 years ago. Keep this perspective when the price of Bitcoin falls. Nothing can grow this fast in a straight line, and Bitcoin itself just continues functioning flawlessly as expected with no central third party like normal.